Economic Forum in Davos. CNBC is in conversation with Nouriel Roubini, a renowned American economist. Let's cut in live to what he has to say on the outlook going forward.
When you had the similar rise in interest rates, you had the crowding out of capex, you're crowding out of real estate, and that the Fed could not raise exit QE, right? So the same thing could happen right now. For now, the market's going higher, but I think that if the fiscal stimulus is going to become excessive and it's going to lead to inflation rise, and then the Fed has to tighten faster than otherwise, then the dollar is going to strengthen even more so. Donald Trump says he has saved 1,000 jobs in Indiana, but the rise of the dollar based on the Fed model, 4%, is going to lead over the next year and a half to 400,000 jobs being lost in manufacturing. No wonder they're starting to talk down the value of the dollar. But if you think about the fiscal stimulus, the repatriation tax, the protectionist policies, all these policies are going to lead to a strengthening of the U.S. dollar, and talking down the dollar is not going to work, because what's going to be driving the dollar are economic fundamental of loose fiscal, tight money. That's going to lead to strong dollar and then to protectionism.
Well, the Fed might slow down its path of interest rate hikes, and that could calm the dollar down.
Well, if the dollar is going to be strengthening excessively, probably the Fed might hike rates slightly slower than otherwise. But if you have an excessive fiscal stimulus that pushes interest rates much higher, the dollar much higher, that's going to lead to a situation which will be a hurting of manufacturing, and then the Fed will have to go more slowly. But inflation may rise if there is stimulus that is excessive, and that's going to force the Fed to tighten more than the market are currently expecting.
And Nouriel, trade arguments aside, what is your view at the moment on China? Because there's a feeling, I think, this year compared to this time last year, that Asia's not an issue in 2017. US markets are quite relaxed about the Chinese outlook. Is that the same with you? Are you confident of a good year for China?
It's going to be a good year only because of the National People's Congress. If there's going to be a slowdown of growth, they're going to do what they've been doing for the last few years. Another round of credit fuel fixed investment. That means more bad assets, more bad debts, more leverage, more overcapacity. So the Chinese are talking about structural reform and rebalancing, but because of political constraints, they're not doing it. That's good for growth in the short run. It's good for global growth. But in the medium term, that increases the chances of a harder landing of the Chinese economy.
So I'm going to push back against the view for just a moment. If the rest of the world is improving, including China, which is the second biggest economy, you do have in the U.S. this sort of excitement from businesses. I've mentioned the confidence surveys a number of times. The fact that regulation, according to executives and investors we talk to, has been strangling certain industries and the economies is going to set to be looser. You don't have a Congress that can't get anything done because they're deadlocked. And you might even have tax reform with very favorable ramifications for business. Why isn't all of that good and actually positive for the economy, as the market indicates?
Well, the stock market is happy because you're going to have a fiscal stimulus in the short run, increases economic growth. It's going to cut taxes for the top 1% on income taxes. It's going to cut corporate taxes. It's going to have a repatriation tax, is 10% for corporates. It's going to cut the estate tax to zero. It's going to reduce capital gains taxes. There's a slash regulation on labor, on energy, on environment, on everything. Of course, the stock market is going higher. But if you do a fiscal stimulus that's excessive, you're going to have rising interest rates, strong dollar, then you have to go to very protectionist policies, and then the market is going to panic, and you're going to start trade wars with the rest of the world. With Mexico, with China, it'll become very protectionist. So in the short run, growth is rising, the stock market is going to rally, but if these economic policies are inconsistent, fiscal, monetary, exchange rates, and then protectionism and bashing globalization, then eventually the markets and the economy is going to turn around in a negative way. So that's what I'm worried about.
So your end game here, as you predicted, is a trade war?
I think there is a high likelihood of a trade war based on what has been said. And with the paradox yesterday, President Xi Jinping, is the president of a nominal communist country, defends free trade, globalization, and free market capitalism. Well, we have the leader of the biggest capitalist country in the world, is talking about bashing globalization, free markets. Ned Phelps, the Nobel Prize winner from Colombia, said the corporate policy of Trump reminded him of Nazi Germany and corporate fascist Italy in terms of bashing firms and telling them what to do. We don't want corporatism in the biggest capitalist economy in the world. That's the direction we're going. It's not going to be good for the market, for the economy.
And Nouriel, let's just round things off with a specific question on the UK. We had a speech from Theresa May yesterday. What did you make of that? And do you think the pound continues its bounce from here?
Well, I think that essentially the UK has decided to have a full break with the EU. In the short run, the economy is doing well because you've had a fall in the value of the pound. Consumption is still strong, but there's going to be a significant effect on real incomes and consumption coming from weakening of the pound. The economy is going to slow down, and I think reaching an agreement with the EU is going to be very hard, and you might be stuck in an equilibrium which have very little access to the single market. And over time, rather than a recession, there is a risk of stagnation, of low, mediocre economic growth in the United Kingdom over the next few years. That's a risk that the markets are not pricing right now.
Donald Trump sort of casually mentioned that other countries could follow suit, leaving the EU. The economics are difficult in Europe. As an economist, do you share that view?
The economic situation is difficult, but last year the EU grew faster than the United States, 1.7 as opposed to 1.4. Point two, NATO and EU have been the basis of economic prosperity and peace for the last 70 years. Now we're saying that NATO is obsolete, the EU is going to destroy itself when Russia is becoming more aggressive from Ukraine to Syria to the Balkans to the Baltics. We do want the destruction of Europe and the Eurozone. What's going to be inflation for the world? I think that this talk is very dangerous.
Nouriel, thank you very much for joining us this morning.